And while it is August, and it usually means a summer break with many at the beach or in the mountains, but there's no break from the trade and tariff saga. We'll get you more on this next report. Take a look.
The so-called hard tariff deadlines are proving to be more flexible than initially thought. Since Liberation Day, we have seen numerous deadlines for U.S. trading partners to comply with American demands. However, the consequences of non-compliance remain ambiguous. Despite the flexibility of these initially strict deadlines, it would be a mistake to assume that Trump always chickens out. Financial markets have described the pattern of Trump's tough words followed by soft actions. Instead, we are in the midst of an economic power play, which some might even call blackmail. The longer it lasts, the more everyone seems to get used to it. Trump's tariff threats have evolved into an economic power play, pushing trading partners into making billion-dollar investments in the U.S. to maintain access to the country's market. This strategy effectively imposes a double tariff: the headline tariff on exports to the U.S. and the money invested in America itself, which can no longer be spent at home. In other words, Trump is demanding that trading partners show him the money in the form of investment pledges or face astronomically high tariffs. Now, this raised the question of whether trading partners are becoming trade hostages. It's unclear whether investment aspects of trade talks will move beyond headline figures and weigh commitment. Unlike tariff, investment pledges and purchase commitments are harder to monitor. These raises questions about how the U.S. might respond if countries fall short of even with a deal the tariff issues persist. Take a look at Switzerland, for example. For Trump, tariffs are a versatile tool used well beyond trade balance concerns. One can only guess at the long-term implications of such economic power play. Disrupted supply chains, strained diplomatic ties, economic selfishness, and less efficient global trade are just a few risks. Markets struggle to incorporate longer-term structural changes into their prices. Often the reflex is to ignore until something breaks. And that's why their attention now is almost entirely on whether the U.S. economy will slow down. The tariff back and forth means they have only increased gradually since the start of the year. The true effects will take time to unfold, but they are happening. Just look at the cooling labor market. Cost of tariffs have already started to reflect in inflation data, which is a bigger worry. Business Bureau Report, WION World is One.